Welcome back, folks. Our phone number is 877-927-6648. Let's go over to our man, Mr. Bob Archer. Bob, folks, is the CEO of Great Panther Silver. Bob Archer, welcome back to TFNN.
Hey, Tom. How you doing? Great to be back on the show.
It's thank you so much for coming on. I mean, I know it's not easy after a downdraft like that on Friday. Tell us what you think happened there.
Yeah, well, I feel like I just got off a roller coaster for sure.
Yes.
Essentially, what happened was that we've been a part of the what's called the GDXJ, the Junior Gold Miners Index, which is an ETF fund in New York.
Yes.
And they hold various companies on the basis of market cap and a few other parameters. And with the state of the mining industry right now, a lot of people's companies' share prices have been falling, and consequently their market caps as well.
Sure.
And when we fell below the threshold, they put out a notification that we were going to be dropped from the index, and they held about 10.5 million shares of the company, and we only have about 140 million shares on issue. So, we're talking about a sizable block. And
sure.
What happened on Friday was that they sold that block right at the close. The share price, as you mentioned, was pushed up to 55 initially, and then that block came out, and it just cratered the stock to 32 cents. Continued to trade after market. We traded probably 12, 13 million shares after the market closed, and got up to about 39 cents after market, and then Monday opened at 41. So continuing to trade good volume, and we're still, even today, still trading in that sort of 41 to 43 cent range.
Sure.
So it's been quite a ride for sure.
Oh, I'm telling you, man. It's pretty intense being a CEO in the mining business right now, Bob. There's no doubt. There's no doubt.
It is. Yeah.
And, if you're watching Tiger TV, folks, you can actually go over to, I've talked about ETF structures many times, Bob, about how they're great on the way up, and on the way down, they can really hurt everything. I remember,
absolutely.
I remember in 1999 when the NASDAQ was crashing, the first time that the Qs actually started trading, I had the vice president of the American Stock Exchange. That's where they used to trade, right? And he was explaining how they work, and I said, oh, this is pretty cool. Now, in the bull market, that was great, because whether at that point it was Dell, Microsoft, Sun Micro, if they went up, it was the egg of the Qs, okay? If they went up, the Qs would go up. The Qs go up, they would go up, okay? But then, of course, when it was the downdraft, it was, no one could understand why things went down so quick, but it had to do with the ETF structure, because that only had to do with not a fundamental reason. That had to do that if they're selling, that's selling. That lock, stock, and barrel, that was it.
Absolutely.
So I can see in this structure, so what you can do, folks, is that you can actually go over to Van Eck and see the actual holdings, and I'm actually looking at them right now, and you can see, and then on Bloomberg, it's interesting, Bob, on Bloomberg, they have to catch up with it, because I can see on Van Eck they only have 9 shares left, and on Bloomberg they're still showing that they had those 10.5 million shares. So yeah,
I think the Bloomberg site probably only updated on maybe on a quarterly basis, whereas Van Eck keeps a daily update on their own site.
Which is great. So let's talk about the company. When you look at the company news, I know. Well, first off, tell us where you do business, and I know you got a couple new option agreements. Tell us about that.
Sure. Well, the company's operations are in Mexico, 2 operating mines there, one in central Mexico at Guanajuato and another in Durango State called Topia.
Yes.
And so we'll produce between 3.5 million and 4 million ounces of silver equivalent this year. We've just optioned 2 new projects, one in Mexico, and that's in Sinaloa State, and the other in Peru. So we're stepping out geographically for a bit of diversity, and the one in Mexico is a gold-silver project, and we acquired that through the acquisition of our sister company, Cangold.
Okay.
And given the difficulties in the market these days for smaller companies to raise funds, Cangold was struggling with that, and we loved the project. We do think it will be a mine, and we didn't want to lose it. So the easiest way to keep it in-house was just to acquire our sister company. So we have that now. It's an option agreement with Vista Gold. We can acquire 100% of the project, and we're just about to get started drilling on that in the third quarter. And moving forward with a revised resource estimate and hopefully a preliminary economic assessment early next year.
Now, you know, I've never been to your mine, and one of these days, man, I got to get down there because I've seen pictures of it. You know, you hear out of, you know, Mexico's always been a great place to do mining, no doubt. I mean, and I know the mine you have, your main mine at this point, what has been is it a billion? Is it a billion ounces that have come out of that? I mean,
historically, yes, that's correct. Yeah, 1 billion ounces of silver. Mm-hmm.
That's amazing, man.
Yeah.
You know, safety-wise, talk to me about safety-wise, because there has been a couple things in the press that, you know, sometimes they're having trouble in Mexico now. Well, safety-wise,
yeah,
where do you stand?
Yeah, we're in pretty good shape there. I mean, partly because of the historical nature of the mine. I mean,
yes.
It's been in production for 400 years, and the city exists because of mining. The city is now the capital of the state, and these are underground mines which are effectively underneath the city. And so, you know, we're right in the city, and it's the state capital. The governor lives there, and so on. A city of about 250,000 people. So it's you know, we don't have the same sort of security concerns with cartels and so on that some of the more remote sites in Mexico have.
Yes.
And so we've you know, we've been quite lucky that way. It's you know, we had an issue about a year ago with some illegal mining, but that was completely unrelated, and we haven't had any problems for a year, so that's behind us now.
Sure, and the proximity, I guess, is definitely really important, right? When you're close to a city, it's a lot better than being out in the country somewhere.
Yeah, no, that's right. I mean, we're right. The infrastructure's terrific. We're on the power grid, and get water from the mines, actually, so we don't even have to draw from city water. So no, it's great. Bus pulls up outside the front gate, so it's great infrastructure for sure.
Now, do you mind staying for another segment, Bob?
No, absolutely.
We get a quick break, okay? And because what I'd like to talk about, I know you've been running with no debt for years. You know, and it's pretty cool. You know, even when I have people, you know, they call up and, you know, even when the stock is trading, whether it's $1 or $1.50, and they have stocks that sometimes they want to buy that they think are inexpensive, but the bottom line is that, you know, you're a producer. You're trading it at this 42 cents here, but yet, you know, you're looking at gross numbers of what, 15 million. So I'd love to talk about that when we come back, okay?
Sure thing.
You stay right there, folks. This is Tom O'Brien. We got Bob Archer, CEO of Great Panther Silver. We're going to be coming right back. Dow finished up 24, NASDAQ up 6, S&P's up 3.5. Welcome back, folks. We had the Dow finish up 24, NASDAQ up 6, S&P's up 2.5. We're talking with Bob Archer. Bob is the CEO of Great Panther Silver. It trades in the U.S. as GPL. Bob, I'd like to talk first about, you know, gold, silver, you know, we're trading out at a price point of the 1578 right now. So inside the silver market, what does it take? What price of silver, you know, do you need? In order to basically have good cash flow, profits coming to the bottom line?
Well, Tom, we're as an industry, we're pretty close to the average production price right now,
right,
at these levels, and so you know a lot of operations are just sort of barely hanging on, and we've seen some that have actually closed down. You know, for us, we've managed to get our costs down and get our grades up such that in the first quarter, our all-in sustaining costs were down at $14.47. So we are profitable at these levels and can continue to do so. You know, we're pretty happy with the way operations are going right now, and you know, as long as we can continue to generate positive free cash flow, then we can pay for our new option agreements or acquisitions out of cash rather than going to the market or going into debt. So that's our intention.
And, it's interesting that you got to do that with an option agreement versus coming up with that cash, right?
Yeah, we managed to structure both of those deals towards an option such that it gives us a couple of years to de-risk the projects, and it avoids having to come up with large sums of money either through an equity financing or borrowing it. We can just pay for things incrementally as we go on, as we de-risk the projects, and we can always walk away at any time if silver price plummets or something goes wrong with the project or anything like that. So it's a great way to move forward in this kind of a market.
I've owned your stock many times, and we have many clients that have, and we all went through the downdraft of 2008, and it's pretty amazing. I think many folks that were in the metals market were in shock that the country and the world was going broke, and yet the metals actually went down with them because that was a total liquidity event everywhere, right?
Right.
Which was very surprising at that point. It was like what we went from 1178 in gold down to 666, and so a couple weeks ago when I saw you got that, I know you've had no debt for forever, okay? And I've always thought it was pretty neat how you could operate with no debt. I mean, that's as good as you can get, right? And I saw that coming across the Bloomberg tape, I saw you took out this $10 million facility, right? And personally, I thought it was so freaking smart because, I'm looking at the metals price, and I know that the way that it works, because, I'm in this business, but we have a large real estate operation too, and how it always works is that you always want to get the money when you don't need the money, right? Just in case something happens.
Yeah, that's right. I mean, the credit facility is essentially like an insurance policy or a safety net. I mean, we don't know what metal prices are going to do, and if we do have another crash, whether it's temporary or otherwise, like we did in 08, we need to be able to weather the storm. And even though we have about 19 million in cash right now and no debt, that credit line does give us a lot more flexibility, and so it's nice to have it in place. But we did not take that out to pay for the option agreements or the work on those projects. This is purely from a financial flexibility standpoint in the event that we might need it. So, as I mentioned, we do intend to pay for the new projects out of cash flow on a going forward basis.
You've been in this business a long time, so discipline-wise, right? You get a nice run up in gold, silver, big time. How did you keep the discipline in order to not go the way of the Barracks and the Newmonts with debt up the yin-yang and having to, push out, a huge amount of mines in order to basically reduce that debt?
Well, we did, the last financing that we did, Tom, was in 2011 near the peak of the market.
Okay.
And, we raised about $22 million at that time.
Yeah. And,
we had been looking at acquisitions, and that was the primary reason for raising those funds, so that we had cash on hand to, to pull the trigger on something if we saw it. So, we didn't raise that for working capital because at that time silver price was quite high, and we were making good profits. And so from an operational standpoint, while the silver price was high, we continued to just funnel our profits back into the operations to modernize them, to buy new equipment, and essentially get them to the point that they're at now, where the capex requirements are quite minimal, really. And it's just drilling and underground development that's required on a capital basis. So that allows us to sort of maintain the status quo or even grow our existing production without having to spend a lot of money on the operations themselves. So we haven't financed since 2011. And just maintaining that discipline while we looked for new projects. And then, going structuring these two new acquisitions as options has also helped in that regard as well.
Well, yeah, it's intriguing. I mean, you know, I really appreciate it first coming on explaining it, because we're getting some calls in here, and I'm really psyched at the aspect that that's what it is, because it's always a lot easier when you understand exactly what's going on. And in my particular case, and the audience, they know I've explained these ETF structures many times of how they can be great, but yet be detrimental on the other side. Mm-hmm. What is really cool is that as that equity went down, of course, it popped right back up the next day. So it's like, okay, this is going to get interesting watching how this whole thing shakes out.
Absolutely.
You know, and then I guess the bottom line is that you just start getting a new investor base. But it seems that if you believe in the price of silver, an investor base, is something that will come your way.
Yeah, definitely. We still enjoy a very strong leverage to the silver price, and I mean, leverage works both directions. So
sure.
You tend to get oversold on the way down, and but then you enjoy a really nice pop on the way up. And with the growth prospects that we have now, we can if both of these new acquisitions are positive, including the one in Peru. Then that could more than double the size of the company within 4 to 5 years.
It's huge.
So there's tremendous growth potential there, and we can take both of those to right up to production decision without having to tap the markets.
Absolutely. And listen, folks, the website is greatpanther.com. Check it out. Go to greatpanther.com. You can see exactly what's going on. Bob Archer, man, thanks so much for coming on. Really appreciate it. No, it wasn't easy after that downdraft on Friday. We do appreciate you explaining it to us, though, man. Have a great one. Have a safe one.
Thanks a lot, Tom. Great to talk to you.
Okay, bye-bye. This is Tom O'Brien. This is TFNN. Dow finished up 24, NASDAQ up 6, S&P's up 2.5, and Boeing just come out with a new CEO, I believe. Boeing, we'll talk about that as soon as we come back. Yeah, they get a new CEO coming up. We're going to be right back, folks.